I want to start off with this interesting story where the government wants French cement conglomerate Lafarge to reduce its stake in East Africa Portland Cement. And this is an interesting story because Bamburi, which Lafarge also owns, is the biggest shareholder in East Africa Portland Cement. What are you making of this?
Then, of course, there'd be more downside for the S&P. But you have to remember,
there's a new anti-competition agency that was formed recently, and they looked at within various sectors of the economy, and they tend to feel that Lafarge, though it's one of the largest shareholders in Bamburi, it's also a shareholder in East African Portland Cement, and they felt that that does not meet the criteria, or it tends to border on unfair competitive practices. Yet Lafarge, on the other hand, says that its shareholding is independent, because when you look at its shareholding at East African Portland Cement is actually a minute percentage, whereas its majority shareholding is in Bamburi, and the shares it owns in Lafarge is twofold, independently and Bamburi. So there's no element of interference, because they say they do not have anyone sitting on the board, they do not dictate day-to-day running. But we are yet to see what will transpire from it. The meetings will take place between today, tomorrow, and we'll see the outcome about it. But more or less, it's just a flexing of the muscle of the competition agency, which wants to now start streamlining various processes.
And it's an interesting thing you say the competition agency is flexing its muscles, because we haven't had much from this agency before. And also the other interesting aspect is both companies are listed on the stock exchange. What does this mean for their shares?
Yes. Well, more or less, it just, if the various investors would take a back seat and look at what is the outcome, what is the likely outcome. But in terms of viability, because more or less the competition agency is dealing with procedure, not really day-to-day running. But it could also have an element, because if you look at Lafarge's influence in terms of in the cement industry worldwide, it's actually a very big company. And if they feel that their stake in East African Portland Cement is somewhat challenged, they could rethink also their strategy at Bamburi. But that is neither here nor there, because competition, you have Katik, this is a Chinese company that is actually on the market. So it's a competitive area. And I guess more or less the key element they're trying to address is to ensure that there is no element of price fixing, there's no element of a monopoly on the same. Hence, they're looking at it, approaching it from that point of view. So as investors, you look at what is the long-term effect. Will it directly affect the company? No, it won't. It will end, more or less, it's just an element of procedure to ensure that are certain guidelines in place. And that's the way I would look at it.
Certainly an interesting story to follow up on. Let's move away from that. Deacons Kenya, the Capital Markets Authority, today approving that listing. How is this likely to play out, considering it is a listing not by an IPO, but by introduction?
Well, one thing is it's going to be cost effective, because if you look at IPO, the elements involved in cost, getting an IPO running, the advertising, the requirements, the due diligence requirements by the CMA. Now, a listing helps a lot of companies. And then going by the history, if you look at between 2006 to date, there have been more 2-3 companies that have listed, Bank, British American, and the results have been very pathetic in terms of the uptake. There have been very few people taking up when you go via the IPO way. A private listing helps you come onto the bourse, and it also helps you get your price in terms of you're able, it's almost like a sale by private treaty, if I'm to use a better word. And then two, the due diligence element is, albeit not as, it's still there, but not as strict. And the cost overall is very minimal, because you do not involve the various aspects of getting the IPO from advertising and what have you. So one, on the cost element, it will save Deacons a lot of money. Then two, it will now test the market, because you notice the market has been bullish to an extent, but very bearish. We have a lot of foreign investors who are skeptical about it, and the local investors who majority relied on financing to buy into the stock market. But with the very high interest rates, that has tended to be different. They've also taken a backseat. So private listing helps, you will notice, because look at CIC has done the same. So now Deacons has come on board. But when you look at their market presence, they've had a lot of stores, they've expanded.
Right.
There are Mr. Price stores for you. And it's going to be, it is a viable company, but they do not want to risk going directly via IPO and then have egg on their face too.
Waiyaki, finish up with me by looking into your crystal ball for me. Do you think that bullish run will continue? We might start seeing a bit of profit taking at the NSE.
Well, I would say the bullish run is subject. We are coming into an election year. You know how Kenya is when we approach that. Then also we are not in isolation. There's so many things that are happening in the world over. There's been the Greek issue in terms of the euro debt. There's been the pressure on the Kenya shilling vis-a-vis the US dollar. We know the US will be going into an election. So when you look at all those things into play and where we are and current systems in place, you notice the Monetary Policy Committee of the Central Bank has also noticed that the key advantage is that inflation is not as high as it was. So if I'm to look at the crystal ball, I would say no, it will still be a bearish market and it will be a buyer's market. So all investors looking at it, it will more or less be the most appropriate time to buy, because when you look at the short runs of the bullish run, look at what has happened to Chumi. It had a bullish run and only to reach an extent where there is profit taking. So more or less, when you look at it from that extent, it's almost like a bullish run, and most people look at, okay, let me cut my losses, let me recoup what I invested in and move out. So let's say it will continue being a bearish run for now.